Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. For a change, the action here is becoming clearer than the one in Chicago wheat, which has not always been the case. The origin of the most recent move up was not a key reversal up or an outside day, as in Chicago. Rather, it was how the market headed into that maelstrom of support below, stretching from 1024 downwards, that then caused the market to halt its decline and gap higher just the once in early April. Prices continued rising through the recent 50% Fibonacci at 1146, which at the time was surprising given how it had acted as a brick wall overhead back in mid-March. But then the market started to falter at the recent 61.8% Fibonacci line at 1183, heading back lower. That was until the market reached the lesser Fibonacci line at 1089, and perhaps more importantly, being rejected by the nearby rising short-medium moving average, currently at 1093. Thus, this week's rejection back up is on the verge of making a possible weekly key reversal up here, much as in Chicago wheat. If we close tonight over 1158, then we'd be on. However, this is seemingly not as strong as a Chicago contract, as the possibility of the market making a weekly key reversal up is not as certain as in Chicago. Now, one final quick point, and it's something that I said last week and the week before. I said then that if this market did not manage to maintain the 50% Fibonacci line at 1146 or the rising lower tine, currently 1169, then I was quite prepared to draw my first bearish Andrews or shift pitchfork for quite a while. Well, prices did not manage to maintain either, but it is a big but. But if prices make this weekly key reversal up, then we would be back over the 50% Fibonacci line. And I will forgive the move lower at the end of last week and the start of this week and see if we may indeed have another new pattern, such as a possible bull channel, currently at 1099 to 1241 for the mid-March today action. Let's wait and see if this works out tonight. Minneapolis wheat. Please kindly still ignore the color change in the labeling. It is just my charting system playing its usual silly buggers. There is no special significance to the colors. Okay, so I am very pleased once more to see that the market, the March 2021 to January 2022 bullish Andrews pitchfork is here in the market, still alive, well, and pointing the bullish direction of this market unlike some of the others in Chicago and especially Kansas City. The most recent move higher was created from the double bottom formed over March, which after a lot of hesitation, toing and froing of action, and in one case to the fifth countering degree, saw prices move higher. The market's now running along the top of the middle time, currently 1179, of the bullish Andrews pitchfork, finally making a new high today. The April 2008 high at 1166, which originally provided inconclusive resistance, did provide support this week, along with the sharply rising short-moving average, currently 1174, to set up a very interesting pattern for this week. See, we are on the verge of a weekly key reversal up here for this week. If we close tonight over 1166, which currently seems likely, then we would be on. Right now, the market is once again having a tussle with the resistance at 1209 from March 2008, which had so far been a useful piece of resistance capping the market back in early March. Meanwhile, below the middle time, we have really nothing of note as support until the March highs in 1114, 1115 area. Overall, yet another pattern emerges. Overall, until another pattern emerges, follow the bullish Andrews pitchfork and the middle time especially. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.